Today, Renewi announces its first set of preliminary results. I'm joined by Chief Executive Peter Dilnot. Peter, can you talk me through the business performance over the last year?
Well, it's been a transformational year for us with the merger between Shanks and Van Gansewinkel Group to create Renewi, a leading international waste-to-product company with a very clear vision and a bright future. Now, underpinning the merger itself is a strong performance from Shanks, which delivered trading profit up 9% at reported currency, which does include some benefits of FX. That performance is driven by a very good trading delivery from the Benelux divisions, offsetting some challenges in Municipal. Van Gansewinkel Group, the business we've acquired, has also performed strongly, with EBITDA up over 20% in 2016. So overall, we've created a new, enlarged, more competitive business, and we've got some very positive earnings momentum.
You've doubled up business in Benelux, so what is actually happening there?
Well, there's a couple of things. Firstly, we've got market growth with volumes increasingly, but secondly, and importantly, we have got our self-help initiatives which are really reading through. We know this market very well, and we've been working to improve our core Benelux business for some time. And the results, I think, are evident today. For example, in our commercial division, which represents over 60% of our Renewi revenues, the trading profit is up around 27%, and importantly, returns on assets, 300 basis points improvement year on year. So the Benelux market is improving, and we've got good traction, and clearly we've doubled up in this business, so can now drive value off a much broader base and with stronger market positions.
The UK Municipal division is having a tough time though, so what are you doing to put that right?
Well, clearly it's been a very disappointing year for our Municipal division, and in particular in the UK, which represents around 15% of our revenues. The issues are market-based and also operational. In terms of the market, there continues to be significant pressure on municipal PFI contracts, with austerity weighing on our customers. The value of the products we produced, particularly fuels, is significantly lower this year, and that's weighed heavily on our results, as has actually some negative FX for this division. Operationally, some of our plants, our new plants, are not performing as we'd expect them to at this stage, and that's also been a challenge. But what's important here is that we know exactly what we need to do to both reposition the business against that market backdrop and also drive a recovery. And we've got a new management team in place to drive the improvements, and they're doing just that.
It looks like your leverage is still very high. How are you managing cash going forward?
Well, we're managing it very carefully and thoughtfully, and it started with how we funded the deal, which was a blend of raising new debt, issuing equity to Van Gansewinkel shareholders, and indeed raising equity from our own shareholders. It's a balance here, and what we've done is thought carefully about cash generation going forwards and ensuring that this is a highly accretive acquisition for our shareholders. There's a journey to go on as we deliver the synergies, and we've got lots of headroom along the way, and indeed our net debt is better than we expected at this point in the cycle. The key thing though, overall, is that our plans are in place to create a highly cash generative business over the medium term, and then leverage will naturally come down.
What have been the main integration milestones since you formally completed the merger to create Renewi?
Well, I'm really pleased with how the integration's going, and it's not just about formal milestones, it's about the energy and the positivity of the teams coming together to create a new company, Renewi, which is stronger than Shanks or Van Gansewinkel was independently. Now, we've appointed our top team, we've got resources in place to deliver the integration plans, and in terms of the synergies themselves, we need to deliver 12 million this year, and we've already got 4 million in the bag. So we're really doing well in terms of the pace of the integration. I think very importantly though as well is externally making sure that we are staying close to our customers, and the feedback that we've got has been positive, not just about the brand but about what Renewi can do going forwards to serve customers and indeed society better going forward. So clear focus on delivering our integration plan internally while also maintaining a really strong focus externally and serving our customers well.
What's your outlook, and what should investors expect?
Well, as a result of the creation of Renewi from the merger of Shanks and Van Gansewinkel, we have a strong, well-positioned business that will deliver profitable growth going forwards. And that will come really in three areas. Firstly, it's driving the top line revenue growth from market recovery, from cross-selling across Renewi, and capturing benefits from a growing circular economy. The second area is the delivery of margin expansion initiatives, which are well proven in Shanks across a much broader base now. And then finally, the delivery of those synergies. So those three things will read through to a strong performance in terms of profit generation, but also attractive returns. So we're very clear about what we need to do, and we've got real energy and passion to deliver it.
Peter Dilnot, thank you very much indeed.
Thank you.